Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Wednesday, May 11th, 2016, and this is the Daily Report for Gold and Silver. We do have a strong showing in the precious metals markets, trading up higher on the day. Gold trading up approximately $12 on the day, currently at $12.77. Now it's traded to a high of $12.79. It's just coming off the high right now. It has traded to a low of $12.64 in overnight trading. We, of course, did send out a special trade alert recommending that you initiate long positions in gold. Of course, we'll talk about that when we pull up our first chart. Silver also trading higher on the day, currently up about 33 cents at 17.40. So traders, first, I did send out a special trade alert this morning recommending that our subscribers initiate long positions in gold. On today's show, I want to spend a couple of moments and talk to you about the thought process behind going long today. Of course, we did talk about the setup yesterday, as well as our stop placement and our upper level exit strategy. First to the trade, we are looking at a daily standard candlestick chart of gold. If you recall from yesterday's show, we talked about the fact that as this market came off these lows at about 1305 and began to move lower, we talked about the fact that we could in fact see some support come in the market, and it's also a logical place to look for support at the 61% retracement area. That comes in approximately 1260, 1259 in that area. So as the market came down, we had this final plunge that we got just the other day, of course, on Monday. Yesterday's candle did make a lower low, made a lower high, but it was really a very, very small bodied candle. And of course, that is a star in terms of candlestick patterns. We also talked about the fact that to complete the setup, we would be looking for a simple pattern called a three-river morning star. And to complete the pattern, this three-day pattern, we would have to see today's trading day be a green candle, meaning it opened and closed higher than the open with a higher high, higher low, and the larger the candle, the better. We certainly got that today, and as you can see right in here, we got a completion of the three-river morning star. And it's obvious and quite easy to see that we certainly met the entire criteria of that particular pattern. In fact, in trading overnight, as this market was trading higher, I thought about initiating the buy signal then, but we really didn't have a complete three-river evening because it was only up a couple of dollars and the green candle was only about this size. But this morning, as we came in and we started to trade around 74, 75, 76, I actually pulled the trigger. Traders taking that call are in anywhere between 74 and 77 on the long side. We are also recommending stop placement to be under 1257, and the reason for that is 1257 takes us under this 61% retracement, and it also takes us completely under the three-river morning star pattern. Now, although, as I said, we did enter the market on this pattern, typically you will wait for confirmation on a three-river morning star. And confirmation, of course, is the following day, meaning on tomorrow's trades, or when tomorrow gold is trading, that it trades with a higher high, a higher low, and it closes higher than the open. It would look something like this assimilated candle that I just put in. Of course, that would be a great thing because we did go long the market. And as I said, this would be the follow through that we would look at tomorrow. Now, in terms of upper level exit strategies, well, yesterday I gave you my absolute high point that I think we could see the market move to, and I based it simply on a equal move on the last rally, meaning our rally here taking us up to this point here. Let me get the arrow, to here, 61% retracement. We got that, and then a wave up. That would take us around to 1335. We do have areas that we need to overcome. Market is currently trading, obviously, at about 1278, and I would like to see this market effectively move and close above that first, because that is a 38% retracement level. Next, 13 and 1305. Of course, that's where the market stalled last time. So we're going to look for different price points. My lower end I would look for would be just under 1300. On the high end, in terms of the exit strategy, that would have to be roughly around 1330, and that's based upon a one-to-one relationship between the current rally that I believe we've just entered and the previous rally that we just got out of at the beginning of May, end of last month. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.